Hi guys. Today we will analyze Progress Software stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. In the past year, the stock was an average performer in the market. The short-term trend is still neutral. The long-term trend picture is unclear. We need to see a little more continued positive action to open a long position. Support levels are around $43.20 and $42. The next support levels are around $40 and $36. Resistance level is around $46.30. The next resistance levels are around $48 and $53. In the last month the stock has been trading between $42.30 and $46.30 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 0.24 million. This is not a very liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 6% per year, for last 5 years. We see that the average profit margin of the stock has been around 12% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 291% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Progress Software Company: bad, average, and good. First scenario. Progress Software will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 6%. Future profit margin would be a low, 8%. Future free cash flow to net income rate would be a low, 120%. In this case, the fair value of the stock today would be $29. Second scenario. Progress Software will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 8%. Future profit margin would be average, 10%. Future free cash flow to net income rate would be average, 140%. In this case, the fair value of the stock today would be $44. Third scenario. Progress Software will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 10%. Future profit margin would be high, 12%. Future free cash flow to net income rate would be high, 160%. In this case, the fair value of the stock today would be $63. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 1.76. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Progress Software, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 12. Again, I will use 3 different scenarios for Progress Software Company: bad, average, and good. First scenario. Progress Software will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 6%. Future P/E would be a low, 14. In this case, the fair value of the stock today would be $15. Second scenario. Progress Software will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 8%. Future PE would be average, 17. In this case, the fair value of the stock today would be $22. Third scenario. Progress Software will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 10%. Future PE would be high, 20. In this case, the fair value of the stock today would be $30. As you can see, today the stock is overvalued, $45, even if we expect the company's high performance in future. The fundamentals are decent. However, the company will show a small growth in revenue, 6 to 8% over the next 5 years, and investments in the software business can be tricky. I'm not familiar with this company and its products. So, I'm not ready to buy the stock at $45. Do your due diligence on this company. Maybe you'll like the stock at these levels, but I would wait for a lower price, below $35. Company strengths. Progress Software Corporation provides software products to develop, deploy and manage business applications. Its product category includes digital experience, DevOps, infrastructure monitoring, secure file transfer, secure data connectivity, and integration, and other. Its services consist of consulting, education, modernization and outsourcing. Strong distribution network. Its indirect channel partners are independent software vendors, original equipment manufacturers, distributors and resellers. It operates around the world through local subsidiaries as well as independent distributors. Superb performance in new markets. The company has built expertise at entering new markets and making success of them. The company has strong free cash flows that provide resources in the hand of the company to expand into new projects. Its products are sold as perpetual licenses, and its cloud-based offerings use a subscription-based model. New customers from online channel. Over the past few years the company has invested vast sum of money into the online platform. This investment has opened new sales channel. The company's return on assets of 6% and return on equity of 19% are amongst the best returns of the industry. Its profit margin of 15% is amongst the best of the industry. Risks. Intense competition. New technologies developed by the competitor or market disruptor could be a serious threat to the industry in medium to long-term future. Limited success outside core business. Even though Progress Software is one of the leading organizations in its industry, it has faced challenges in moving to other product segments. Shortage of skilled workforce in certain global market represents a threat to steady growth of profits for the company. As the company is operating in numerous countries, it is exposed to currency fluctuations, especially given the volatile political climate in number of markets across the world. Growing strengths of local distributors also presents a threat in some markets as the competition is paying higher margins to the local distributors. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow only by 6 to 8% on average per year. The earnings per share will grow only by 7% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.